ever stop to think about how incredibly fast money moves today?
Yeah.
You tap a button on your phone and bam, your friend gets paid.
Yeah, it's almost instant.
But behind that lightning speed, there's this hidden world where financial institutions are fighting off criminals who are also operating at that same breakneck pace.
That's absolutely right. And what's fascinating really is the a central role a concept called real-time processing plays in this ongoing battle. We've been looking at a really insightful piece from FinCrime Intelligence that breaks this down.
Okay.
It explains why this isn't just about speed, you know. It's a fundamental shift in how we safeguard our financial system.
Okay, real-time processing. It sounds pretty self-explanatory, but let's dig a little deeper. What does it actually mean in this context, keeping our finances safe, according to the article?
Well, essentially, it's the ability to handle financial transactions or data instantaneously.
Right.
Think of it as capturing information, say, when you make an online purchase, analyzing it, and then taking action on it without any, well, noticeable delay. In the financial world, this immediacy is becoming indispensable for, like, everything from verifying a payment to spotting a potentially fraudulent attempt to access your account.
So the core of what we want to get into today is why this real-time capability has become so critical in today's financial landscape, particularly for, protecting against those who want to misuse the system.
Hmm.
And it sounds like this article from FinCrime Intelligence is our key guide here.
Absolutely. Because what the article makes powerfully clear, and I think this is important, is that real-time processing isn't just a fancy tech upgrade. It's a critical defense mechanism against financial crime.
Critical defense mechanism.
Yeah, that's a strong way to put it, and it really highlights its importance.
It does. And it seems to sort of flip the script on how things used to be done, right? Instead of
Yeah.
investigating a crime after it's already happened.
Exactly.
We're talking about intervening right as it's unfolding or even before it can be completed.
Precisely. By continuously analyzing transactions and user behavior as it happens, financial institutions can actually prevent illicit activities.
Like what kind of activities?
Well, whether it's someone trying to steal your credit card info, move illegally obtained funds, or even bypass international trade restrictions, they can stop it before the transaction goes through.
Yeah, okay.
This proactive approach, it significantly minimizes potential harm and losses.
Now, the article highlights some specific areas in finance that are particularly vulnerable, sort of danger zones, where this real-time monitoring isn't just helpful, but absolutely essential. What are some of those?
Yeah, it points to several high-risk areas where speed and volume create these unique challenges. First off, instant payments and digital wallets.
Okay, that makes sense.
Because these transactions happen so rapidly and often skip some of the traditional checks, the checks and balances of older systems,
Right.
the ability to identify anything suspicious in that exact moment is paramount. If something looks wrong, you need to know now.
Yeah, you don't have time to wait, especially with how quickly funds can move and potentially just vanish with those methods. What other areas did the article flag?
Cross-border wire transfers are another big one
Mm.
because these involve different countries, different regulatory environments. They can be more easily exploited for things like money laundering. So having the capability to screen and analyze these in real time, looking for red flags, is crucial.
Okay.
The article also mentions cryptocurrency exchanges. Given their, well, relatively new and evolving regulatory landscape, they really benefit from real-time transaction monitoring to track potentially illegal movements of digital assets.
And I guess these high-speed risks aren't just limited to payments, are they?
Not at all, no. The article also emphasizes high-frequency trading environments.
Ah, right.
Here, the sheer number of transactions happening in milliseconds demands real-time analysis to detect anomalies that could indicate market manipulation or, other financial crimes that exploit these tiny timeframes.
Mm.
And finally, online onboarding and authentication, like when you're opening a new account or logging in, these are critical moments. Verifying identities and the legitimacy of documents in real time can prevent fraudulent accounts from even being set up in the first place.
So we understand why real-time processing is so vital in these areas, but how does this instantaneous analysis actually work behind the scenes? Can we maybe break down some of the mechanics the article touches on?
Sure, yeah. The article outlines a few key steps. It starts with data capture the instant something happens, whether you're sending money, logging into your bank account, or uploading an ID document.
Okay, so the system's always on, always watching for these data points.
Precisely. And once that data is captured, it immediately undergoes risk evaluation. This is where some really sophisticated tech comes into play.
Like what?
Well, there are rule-based alerts, which are basically pre-programmed triggers for known suspicious activities. But more advanced systems also use machine learning models.
Ah, okay, ML.
Yeah, and these aren't just simple rules. They are complex algorithms that learn from massive amounts of past transaction data to identify subtle patterns that maybe a human analyst might miss.
Interesting. Like what kind of patterns?
Things like unusual spending spikes or transactions from accounts that have been dormant for ages suddenly becoming very active. The article also mentions behavioral analytics,
Okay.
which track how you typically interact with the system, your login times, the
Hmm.
types of transactions you usually make, the devices you use, and flags anything that deviates significantly from your normal behavior.
And based on this immediate risk assessment, what happens next? Is it just automatic?
Well, yeah, the system makes automated decisions. If the risk score is low, the transaction might be approved seamlessly. If it's borderline, it could get flagged for a human analyst to review.
Right.
And if it's deemed high risk based on the rules and the models, it might be blocked immediately. What's also key, as the article points out, is that these real-time systems often integrate with other security and compliance tools, creating this kind of unified defense system.
What I found particularly impressive reading the article was the ability of these systems to see more than just the single transaction in isolation.
Exactly. Yeah, sophisticated real-time systems can correlate what's happening right now with a user's historical activity, or even compare it to the behavior of similar users.
So it builds context.
Precisely. Imagine the system is like a detective who knows your usual routine. If suddenly you start doing things completely out of character, say, making a huge purchase from a country you've never shopped from before that raises a red flag in real time,
Okay.
this ability to spot unusual patterns is just crucial for catching sophisticated financial crime.
All of this sounds incredibly powerful and beneficial. The article highlights some key advantages for financial institutions. What were the main benefits that stood out to you?
Well, I think the most significant one is pretty clear. The mitigation of fraud and overall financial risk.
Right. Stopping the loss.
Exactly. By intervening early, institutions can prevent substantial financial losses and protect their assets. Secondly, it greatly enhances their ability to meet regulatory requirements.
How so?
In many areas, there's increasing pressure for near-instant reporting of suspicious activity, and, well, real-time processing makes that feasible.
And of course, there's a direct benefit for us, the customers, right?
Absolutely. Customer protection is a major advantage here. Real-time monitoring reduces the likelihood of individuals falling victim to fraud or having their accounts misused.
Hmm.
Operationally, it also leads to greater efficiency by automating many of the manual review processes that used to take up significant time and resources.
Less waiting for manual checks.
Yeah. And finally, the article suggests it can even provide a competitive edge. Customers gain confidence in institutions that show they're proactively committed to security.
It does sound like a bit of a win-win, but the article also provides a balanced perspective. It outlines some of the significant challenges involved in implementing and running these real-time systems. It's not just a simple switch to flip, is it?
No, definitely not. One of the primary hurdles is scalability.
Ah.
Processing enormous volumes of transactions in real time demands a very robust, very high-speed infrastructure. That can be a substantial investment. Think of the sheer amount of data needing analysis in fractions of a second.
Yeah, the computing power alone must be immense.
It is. Then there's the critical challenge of accuracy. If the detection models aren't finely tuned, you run the risk of a high number of false positives.
Right, blocking legitimate transactions. That would be frustrating.
Exactly. You have to frustrate legitimate customers and just overwhelm the institution's review teams. It's about striking that right balance between catching criminals and not disrupting everyday financial activity. Finding that sweet spot.
So finding that sweet spot of effective detection without causing unnecessary alarm for regular users is key.
Precisely. The cost and complexity of deploying and then integrating these real-time solutions with existing, often older legacy systems is another considerable challenge.
I can imagine.
And finally, data governance is crucial. Even with these high-speed, automated decisions, institutions need to ensure their actions are consistent with internal policies and all the applicable laws and regulations. It's a constant balancing act. Speed versus precision, innovation versus compliance.
Speaking of regulations, the article emphasizes how regulatory bodies around the world are increasingly pushing for the adoption of these real-time controls in the fight against financial crime.
That's a really important trend, yeah. We're seeing regulators actively encouraging or sometimes even mandating real-time capabilities in key areas,
Such as
such as anti-money laundering, AML, transaction monitoring, sanctions screening.
making sure payments aren't going to restricted entities.
Exactly, checking that before the transaction completes, and even customer verification during that initial account opening process.
It all seems to point towards a more proactive and, I guess, forward-thinking approach to compliance. The article mentions this idea of a risk-based approach and a forward-looking compliance posture.
Exactly right. Regulators want institutions to move beyond simply reacting to known threats and instead adopt a proactive stance. This involves identifying potential risks early on, implementing preventative controls, and real-time processing is just a vital tool in achieving this more forward-looking approach.
So, looking ahead then, the article touches on some of the trends that are likely to further accelerate the demand for and the importance of real-time processing in finance. What were some of the key future drivers you noted?
Well, several converging trends are really pushing this forward. The increasing prevalence of faster payment systems globally.
Like instant payments becoming the norm.
Right. The growth of API-based ecosystems allowing different financial services to connect and share data more seamlessly. The rise of embedded finance, where financial services are integrated directly into non-financial platforms.
Like paying through a social media app or something.
Exactly like that. And the growing reliance on artificial intelligence to drive decision-making, all of these developments inherently require and will further fuel the need for real-time processing capabilities.
It really sounds like the speed of the financial world is only going to keep increasing. There's no slowing down.
Absolutely. And as the article astutely points out, this creates an ongoing arms race.
Ah, yeah.
Unfortunately, criminals are also leveraging these same real-time tools and technologies, which means that financial institutions need to continuously adapt, automate, and innovate just to stay one step ahead of this evolving threat landscape. It's a constant cycle of innovation and response.
So, as we wrap up our deep dive into this FinCrime intelligence article, what would you say is the core message here? What's the most crucial takeaway about real-time processing?
I think the fundamental takeaway is this. We're seeing a significant shift in how we combat financial crime. We're moving away from a reactive approach investigating incidents after they've happened towards a proactive strategy focused purely on prevention.
And real-time processing is the key.
It's the essential engine driving this change, giving institutions the ability to detect and disrupt illicit activities pretty much as they are happening or trying to happen.
It really makes you consider how this relentless acceleration of financial technology will continue to shape both the incredible opportunities and, well, the potential dangers in financial security. And it kind of raises the question, doesn't it, of what role continuous vigilance and adaptation will play, not just for the big banks, but for each of us as individuals navigating this increasingly fast-paced financial world.